Hello, I'm Bernard Hickey with the Daily Briefing from interest.co.nz. Today we'll look at what's happening in the deposit rate market, where we find investors worried about the stock market and finance company collapses are pouring their cash into bank accounts. We'll look at the slump in the share price of MFS across the Tasman and what that might mean for investors with MFS Pacific here and those with the MFS-owned Vestar group, formerly Northplan. And finally, we'll look at the interest rate outlook in Australia, where the new Prime Minister, Kevin Rudd, is planning budget cuts to control inflation and try to prevent another interest rate hike. Firstly, let's look at what's happening in the term deposit market. Figures compiled by interest.co.nz show that net new deposits in bank term deposit accounts more than trebled in the September quarter from the same quarter a year ago. Net new term deposits in banks and non-banks, such as finance companies, rose to $3.7 billion in the September quarter. Now, that's up from $1.12 billion in the same quarter a year ago. It was also up from the $3.4 billion in the June quarter. It's clear from looking at the stats that there was a big influx starting in the June quarter. It seems nervousness around the collapse of Bridgecorp and Capital Merchant and the slowing stock market were a factor in many depositors going for safety in bank accounts. Bridgecorp was put into receivership on July 2. Now, over that period, term deposit interest rates from banks rose around 40 to 50 basis points, but the size of the increase meant it was more than just higher interest rates that drove the increase. The big winners over that time were the ANZ and National banks, both of whom had consistently higher term deposit rates than either BNZ or Westpac. ANZ National took in around $1.4 billion, almost 3 times as much as each of the BNZ and Westpac. ASB took in the least of the big four in the September quarter. Interestingly, non-bank financial institutions, and that includes finance companies, had net positive inflows for both quarters, discounting fears of a mass pullout, although we saw rollover rates falling through that period. Now, across the Tasman, where shares in the financial services and travel company MFS collapsed on Friday, there are growing fears from brokers and some investors that MFS may not be able to service its debt and that it may meet the same fate as RAMS Home Mortgages and Centro Properties. RAMS was sold to Westpac after it realised it couldn't refinance its debt, and Centro is in all sorts of trouble trying to refinance its debt. MFS owes about $1 billion to lenders and is now trying to raise $550 million by selling shares in its travel agency. MFS has $150 million of short-term debt due in March. So what does it matter here in New Zealand? MFS owns a controlling stake in MFS New Zealand, which in turn owns the finance company MFS Pacific. Investments with MFS Pacific in New Zealand are backed by so-called put option. That means MFS Limited, the Australian parent, must buy back any underperforming loans from MFS Pacific in Australia. MFS has even bragged about how much stronger it is than other finance companies because of this put option. I spoke to MFS New Zealand's Chief Executive Jason Maywald this morning, and he said the Australian market had overreacted and the financial health of MFS and the backing it gave to MFS Pacific was unchanged. Now, the other worry for some people is around MFS's reassurance that investors with the former Northplan group would not lose capital from the collapses of Capital Merchant and Bridgecorp. MFS Pacific said late last year it was working out packages to help these investors and would reveal details early this year. Maywald at MFS says there are no changes to that plan. Continuing with news from across the Tasman that might affect us, Australian Prime Minister Kevin Rudd will announce today an ambitious plan to deliver a surplus of nearly $18 billion in his first budget by sharply cutting government spending. This will be the central part of a plan to fight inflation and keep interest rates down. This follows a speech by Reserve Bank of Australia Governor Glenn Stevens late on Friday, warning of uncomfortably high inflation, and that has raised fears of another Australian interest rate hike. So what does it mean for New Zealand? If the Reserve Bank of Australia hikes rates in the next couple of months, that will make it easier for the Reserve Bank here to hike rates too, arguing that rates in our biggest trading partner are rising. Also, it may affect the political debate here ahead of an election. It's great to see Labour leader Kevin Rudd doing everything he can to keep interest rates down. Can the same be said for our Labour government and the National Party opposition, both of whom seem determined to offer income tax cuts in the election campaign later this year? I'm Bernard Hickey from interest.co.nz with the Daily Briefing. Catch you tomorrow.